Welcome, it's denome. In this video, we're going to talk about the good news that happened with Bitcoin, because right now we finally have peaked right above this green line that we have been talking for a long time on this channel. As well as we're going to talk about something that's going on in Europe. So we're going to talk about a little bit about the war that's going on with Ukraine and Russia, because I think that's shifting in favor of Ukraine. So I just want to briefly talk about that, as well as there are some interesting things going on in Europe and some serious default and bankruptcy warnings that I want to talk about as well. As well as there are some energy warnings, so I want to talk about that in this video. So just briefly talking about Bitcoin. As you know, if you've been following this channel, we have been following Bitcoin during this downtrend for a while. And I said that once we actually break through this upper green line, then I am becoming a little bit more bullish than I have been inside this channel. So right now we are actually just peaking right above this channel, but we have not had a daily close, so it will take another 15 hours to actually close this, as well as we need a weekly close to actually confirm the close. So right now some people are speculating that we just fake out here and then we crash to basically take out the bulls and then go for another lower low. So that's always an opportunity, always a possibility. But for me, I think it just makes sense if we just trade sideways with Bitcoin until something happens in the macroeconomic scale. So for me, I think this is a good time to accumulate. And in case we see another massive drop in Bitcoin, that will be a once in a lifetime opportunity to buy Bitcoin once again at a cheap price. But right now, this is the perfect time to accumulate. So I'm expecting more sideways. I'm not expecting it to start trending upwards yet. And there's a chance that we might actually hit lower. But to be honest, there's a lot of demand for Bitcoin right now. And as you can see from the chart, you can see the volume of trading is actually trending upwards, except this last pump here, which is not great. But there's this increasing volume here. That's a good sign that there's more interest in Bitcoin once again. But just this last pump, many people like myself are just watching what's going on, if it's a fake out or if we can actually start trending sideways. So in my case, the best scenario for Bitcoin is to actually just continue sideways here for a while, and then establish basically a new base, and then maybe 6 months from now we can actually start seeing the upwards trend. That would be perfect, or that would be great. But anyway, that's it for Bitcoin. Nothing especially interesting here. What I'm expecting is basically just sideways action. If we see a crash, then I have stables ready that I want to deploy and actually purchase Bitcoin at a cheaper price, if we ever get that situation once again here. But anyway, let's actually go to Europe and talk about Europe for now. So first off, before we talk about the war, actually, I can briefly talk about the war. So I've been following a few independent reporters lately. One of them is Denis Davidov, and he's a Ukrainian person, and he lives in Ukraine, and he speaks both Russian and Ukraine. So of course he's biased towards Ukraine winning, but he speaks both Russian and Ukraine languages. So if you follow him, he gives these map updates for the current situation between the Russia and Ukraine war. And for the last few weeks, Ukraine has just gained more and more and more land almost every single day. And Russia, they had to make a partial militarization in their country, which meant that they have been recruiting people with basically no combat experience. And this is quite bad if you bring people who are newbies to a battlefield. They are first of all a liability for themselves, because they don't really know how to handle a gun, how to handle a fight, how to take commands, and how to actually execute commands, as well as they are a liability for others, because not only they don't really know what to do, but they also take out a lot of the supplies like food and water. And because this is an attack from Russia, Russia basically has to deploy all the supplies from Russia to all of these areas here. So in my opinion, it's starting to look like Ukraine is on the offensive and it might even win. And towards the winter, Russia doesn't really have winter supplies ready, so it would have to bring all the winter supplies to all of these areas here, whereas Ukraine, a lot of the gear that they can get is from NATO and of course from their homes and from basically everywhere. Almost all of the planet is supporting Ukraine, so they get the weapons, they get the gear, they get the clothes, they get the food, they have the supply lines running. But with Russia, the morale is a little bit lower, as well as the supply lines are not that great. So Ukraine right now, it seems like, in my opinion, that they are on the winning side. So for Russia to counter all of these attacks, it will basically have to retreat a little bit and re-establish really good defensive positions, and then start to create a counter offensive once again. So it's like a ebb and flow. Sometimes another side is winning, sometimes the other one is winning. So at the end, we'll see who has more will to fight. But right now, Ukraine is basically pushing, and it's starting to look like Ukraine might actually win this. And if this offensive keeps up, I think it's going to keep up maybe a few more months or so. At least that's a lot of the experts are saying. They can gain a lot more ground here, but then, of course, if Russia can build their defenses here, then they can actually start holding their ground and start building towards a counter-offensive once again from the Russia side. But if this offensive keeps up, and Russia is unable to build these defensive lines, then Ukraine will just simply keep gaining more and more ground. And it is bad for Russia the deeper Ukraine gains the border, basically, because these are the areas that Russia also annexed to their country. And Russia's strategy is more about using artillery than manpower. So Russia is how would I say, their strategy is more about targeting areas with Ukrainians inside. So there's a lot of civilian casualties as well. So their targeting is not exactly 100% accurate. So the deeper Ukraine goes here, Russia would basically have to bomb their own country and own citizens as well when the Ukrainians advance, or Ukraine advances. So the deeper Ukraine goes here, the worse it is for the Russian propaganda, because they will be targeting their own, they think they are their citizens now. So and there's that also. And for Russia to actually use a nuclear weapon, that's also bad, because the deeper Ukraine pushes towards the Russian-controlled areas, it is also worse if Russia uses a nuclear strike or a tactical nuke, because it will also harm their own soldiers and it will harm their own citizens. So in both situations, it's starting to look pretty bad for Russia, and it's looking good for Ukraine. So if this news actually starts to spread, that Ukraine might actually be winning by the end of spring next year, that could actually bring some bullish optimism, hope, and the markets might actually recover from this as well. So just something to keep in mind. And of course, these things always are in constant motion. So what I say here now, that Ukraine might actually be winning, and it might actually be winning by the spring of next year, these might change if Russia is able to start gaining more defensive lines, put some supportive lines there, and they can train their newly recruited soldiers and actually establish better strategies than they have been using right now. So there's that also, that things could change. But right now, if this continues, because to be honest, Russia has not really been able to block these attacks. So they have been losing ground, and Russia has lost more soldiers than Ukraine. Even Ukraine is on the offensive. Usually the side that is on the offensive is losing more than the one who is on the defensive. But because Russia hasn't been able to block the attacks, they have been experiencing more losses than Ukraine for now. So let's see how that continues. Just a brief update from what I'm seeing, looking at different things. But then let's talk about the situation with a few European banks. So Credit Suisse and Deutsche Bank are on the brink of collapse. So what's going on here? So as you know, Deutsche Bank, it's been almost on the brink of collapse basically since 2008. They took a lot of risk, but somehow they were able to manage it, and they did not go under during that crisis. But right now, especially Credit Suisse is under the magnifying glass right now because of this thing here. So this chart here is the Credit Suisse's credit default swap spreads, and they are at 14-year highs. So if you take a look at the last high peak here, that's basically 2008. So just before the last financial crisis. So what is a credit default swap? I had to look this up myself as well, because first of all, what does this mean, and what does this spread mean also? So I had to look it up as well. So what is a credit default swap? A credit default swap is basically a derivative that allows investors to offset the credit risk, which is basically a loan risk. So if you borrowed a loan, it's basically an insurance against that loan. So in case the party is about to default on their loan, then you would gain money. So it's basically an insurance against that loan, from what I understand. So the spread here basically means that investors are expecting Credit Suisse to go under, and that's why the price of these credit default swaps are going higher. And the interesting thing here is that in 2008 it was the Lehman Brothers that went under, and they had $600 billion worth of assets under management before they collapsed. But Credit Suisse has 2.8 trillion in assets. So that, how many times is that more? 624, almost 4.5 times more assets under management than Lehman Brothers. So if something were to happen to Credit Suisse, that would of course be very, very bad. And like they say here in the tweet here, in 2008, the Lehman Brothers CFO said that our capital position at the moment is strong, right before it actually collapsed. So Credit Suisse, there's some interesting things going on here. It could collapse. Deutsche Bank is also under the magnifying glass. I don't know the details of these, but both of these are basically trading are down basically almost 75% or 70%, so from their all-time highs. So that's not a good look for those European banks. So they could go under, but of course there's the counter. How do I say what is it called? When you're trying to save something that's already very, very bad, you make propaganda about it. I don't remember the name. Well, anyway, there's people defending the Swiss Credit Suisse as well as the Deutsche Bank already. So no, Credit Suisse won't see a Lehman-style explosion. Here's why. So basically, these things are similar to what we saw in UK in my last video, where they actually the government went in and saved the pension funds from collapsing by printing a lot of more money and going from quantitative easing quantitative tightening back to quantitative easing. So now they are printing more money in UK and just saving these pension funds. So that's basically what will happen with Credit Suisse as well. So that's again more inflation, and that would be good for Bitcoin or crypto as well. And finally, just want to talk about this one as well, and then I will just give my own thoughts about what's going on as well. So EU is preparing for the possible power cuts and other emergencies as energy crisis intensifies. So many countries in Europe right now, they have issued their own warnings that they will have to cut down power from individuals and from companies as well to basically manage the power in a way that the energy just doesn't run out and that everybody has access to power, but that also means that not everybody will be able to use energy at the same time. So there will be power cuts, arranged power cuts to keep the prices manageable, and also to make sure that everybody at least has power enough to upkeep their life, basically. So so almost this is happening almost in every country in EU. I don't know which countries are not issuing any warnings. The countries that I was looking at are basically all issuing these warnings. So this is another situation where EU might be in a bad situation. So then I was looking at, okay, so what's going on with the rest of the world? So we know that there's a big problem in Europe with their energy situation, as well as the inflation is about to get hand because they have to print money to make sure that their banks don't go under. So it's a bad situation. So one of the wrecking balls that that we see in the market right now is the United States dollar. And why is it a wrecking ball? It's basically because of the United States dollar denominated debt. So I was looking at debt in other countries like Asia and Latin America. So if we take a look at the dollar exposure in Asia, you can see that most Asian countries, despite Israel, Indonesia, and Saudi Arabia since 2016, since basically Trump era, those are basically the only countries in Asia. Unfortunately, China is here as well, but they don't have that much U.S. debt, which is a good thing for these countries because United States debt is bad when the interest rates go up, because then you will have to conjure up more United States dollar to pay back those loans. So that's very, very bad for these countries who have a lot of debt. But most countries here in Asia, they actually don't have that much debt. So that's very, very good for them. So these countries here are safer for this next financial crisis, because when the if Europe collapses or there's a threat of Europe collapsing, that makes United States dollar go up in value. And if you have more debt, then you will have to basically sell your own currencies for United States dollars. And when the interest rates rise, then you need even more United States dollars to pay back. So it's like a vicious cycle. So Asian countries are in a good position, but unfortunately, if you take a look at the Latin America, this is Argentina, this orange one here, and Brazil is this green one. But most of these Latin American countries, as you can see, is almost like 10%, 15% public debt. So they are in a little bit worse position. But then, of course, with China, you probably know that the things are not really great in China, because they also have their own worries with their own banks being on the brink of collapse as well. So it's a whole situation in the whole of the world, but it looks like Asia is one of the best ones, as well as United States is one of the best ones in the world to be at right now. Africa, it's unfortunately not in this article here, but a lot of the debt in Africa is from United States as well, or from Europe. So with Europe collapsing, their purchasing power collapsing, that's quite bad for Africa as well. So Africa and Europe are basically the continents that have the most problems going into this next financial crisis here. But some people, they are saying basically that this is going to be an isolated situation. So this recession that we are talking about is mainly considering Europe. And just looking at the United States dollar debt, it's looking like it's not going into Asia that much. But then again, if we go back to 2008, it didn't really matter where you were. The situation was bad basically everywhere in the world. So even though Asia might be in a little bit better position than perhaps Latin America, it's probably going to affect anyway. And especially China, a lot of the money that goes into China is coming from Europe and America. So that could be bad for China, and through China it could be bad for the rest of Asia as well. So all in all, in my opinion, there might still be a macroeconomic disaster coming up through this winter. And in my previous videos, I've talked about how it's going to be the Europe. Something is going to collapse in Europe. A country, a bank, something is going to cause things to go bad. But I don't know. Is it going to spread? Is it not going to spread? Is it just going to be in Europe? I don't really know. And that's why I'm just trying to be a little bit on the neutral side here. But then again, now let's actually go into the speculation mode here. That I think is the fruit of these videos. So all of these things that are going, what does it mean? What's going to happen? So if a bank in Europe, like let's say Credit Suisse, goes bust, they cannot pay their loans anymore. Then the insurance companies go bust, and then the whole financial scene is going bust. Well, that's of course deflationary, and that's going to be deflationary for financial assets especially. So in that scenario, Bitcoin will probably dip just from the sheer amount of uncertainty and the sheer amount of people trying to get cash as much as they can. But that would cause, in my opinion, a once-in-a-lifetime opportunity for Bitcoin. Because Bitcoin, as you know, even though all the banks in the world go bust, if you hold your own assets on the blockchain, if you have Bitcoin on the blockchain, no one can take it away from you. So it doesn't matter if all the banks in the world go bust, you can still use Bitcoin as money. So for that reason, that's bullish for Bitcoin, in my opinion. But then on the other side, on this speculation, is that if banks actually go bust, like Credit Suisse and Deutsche Bank, that could be used as a scapegoat or a reason to actually implement these CBDCs, which are the central bank digital currencies. And basically, when you see banks collapsing, the central bankers, the EU, the central planners, they might say, oh, take a look at the financial sector. Because of these failing banks, we need to come up with a new solution. So we're going to implement this central bank digital currency. And because we have this central bank digital currency, we cannot have a competing asset like Bitcoin competing for these interests. So in order to preserve financial stability, we're going to ban Bitcoin, and then you can only use these central bank digital currencies, where you would literally have a bank account with the central bank, and they can basically block your account at any time. They can issue limits on your account. They can track all of your transactions. They can track your carbon limits. They can do all these things with the central bank digital currency. So that will be a very dark future for humanity if we go on that path. So even if we go on that path, I think Bitcoin will still have a future, even though it is banned, because you cannot really ban Bitcoin. You can still trade. As long as people want to trade and use Bitcoin, you can still use it. But it's going to be bad for the Bitcoin price. But all in all, it's very, very hard to navigate through this financial crisis, right? So in my opinion, it's good to have dollars, especially right now, because that's the best fiat currency on the market, but it is also good to have Bitcoin as a basically scapegoat from the financial system. And if banks start to collapse, that's going to create even more panic, and that's going to drive the price of Bitcoin up. But just keep in mind that Bitcoin might be banned as well in the future. So right now it's basically just about survival. So if you can survive through this market, accumulate Bitcoin, and also have money for these ultimate drops in prices, then you can utilize those. But commodities like oil, if you see a dip in those, they are also great purchases in my opinion. And of course, as uncertainty grows, gold is especially an interesting asset in my opinion, even though it hasn't really been performing that well. The interesting thing with gold is that it has a monetary history going through basically the whole history of humanity, all through the history, and it still has many use cases in the world. So gold could still be a decent hedge against this financial crisis as well. And then, of course, there's the situation where we don't really have any financial crisis. We just have more money printing, like I was talking about here. So, for example, when EU prepares for possible power cuts and other emergencies as energy crisis intensifies, if we take a look at this article here, it says it is quite possible that disaster relief will also be needed within the EU. So what is disaster relief? From my understanding, this is money printing. So they want to print more money to get out of the energy situation, because the governments don't have money, so they have to create the money, and that will cause more inflation, of course. So there's that. So in all, what I know for 100% certainty is that we will see more inflation going further. So more inflation is coming, but at the same time, we could see a deflationary period where these banks and companies go bust. So commodities, for that reason, it makes a lot of sense. So all in all, for me, it's a good idea to have the commodities, gold, as well as gold, Bitcoin, and fiat dollars, and maybe other fiat currencies, maybe some Asian currencies like Singaporean dollar or Australian dollar. Australian dollar is going to be interesting because Australia has a lot of coal, and because Russia is not supplying gas to Europe anymore, coal will be the coal will be the commodity that will replace the gas shortage. And Australia has a lot of coal, so if you have Australian dollars, you're basically also basically investing into coal as well, because Australia, I think, has the most coal in the world as well. So Australian dollar, United States dollar, maybe Singaporean dollar, those are some of the best currencies on the market in my view as well. I think that's pretty much everything I wanted to say for this video. So it's a mess, right? And we're trying to navigate it. If I had like, okay, this is certainty, this is going to happen, of course I would tell you. But unfortunately, we just have to deal with these uncertainties and deal with these situations. So this is all of my viewpoints on this situation right now and the update going on. And I will, of course, keep more updates coming on this channel, so you may want to subscribe if you like these kind of updates. Anyway, that's it for this video. Hope you like it. Consider subscribing, and I will see you in the next video.